Welcome to Hot Sectors with me, Punita Kumar Sinha. This is a brand new show where we will discuss and give you a 360-degree view on various sectors. Over the last several months, we've seen a number of reform measures being announced to stimulate the economy, and there have been triggers for certain sectors. So can investors find opportunities in sectors that have seen policy action? And what are the sectors to watch out for? Let's start our discussion today with one of the most important and controversial sectors, retail. Modern retailing, a fast-growing sector, but one whose penetration in Asia is still low. Let us see how that's going to change in the future.
The Indian retail market is worth an estimated $500 billion and is expected to cross $1.3 trillion by 2020. However, the sector is faced with a number of problems, from obsolete technology to logistical and supply inefficiencies, which is why the government is betting on foreign direct investment in modern retail.
India, I sincerely feel, must take full advantage of modern technology and the operational and management experience of big supply chains in the food retail business.
Critics say that the move will severely affect local mom-and-pop stores that make up 95% of the sector. With that in mind, the government has allowed FDI of up to 51% in multi-brand retail, but with conditions, including letting state governments have final say on allowing FDI in their states, sourcing almost a third of their goods from small-scale industries, and only being allowed to set up shop in cities with a population of more than 1 million people. Now the question on everyone's mind is, will foreign retailers be okay with investing in India under these conditions?
Joining me now is the leader of Indian retail, Kishore Biyani, Group CEO, Future Group and MD, Pantaloon Retail, and Arvind Singhal, Chairman, Technopack, who is a leading consultant on the sector. Thank you both for joining us today. Now, Mr. Biyani, as you may recall, I was one of the first investors in Pantaloon when modern retailing was just in its infancy. A lot has changed today, hasn't it?
No, I remember that very vividly, and I think it was Lower Parel where you came to see our stores and we walked around, and I think you invested after that.
Now, Mr. Biyani, my first question to you is about FDI in retail. Is the $5 to $10 billion number what you expect in the sector going forward?
I think if you look at a long-term perspective, IKEA has announced a plan of more than $2 billion. If you look at anybody coming in or acquiring somebody or doing a transaction over a period of 10 years, this is not a big amount in a sense, because in retail you have to invest money in quite a few things, from real estate to building up your infrastructure to the back end to building up your stores. So it is an investment, and everybody who comes to India looks at a long-term view. You can't come with a retail with a very short-term view.
Arvind, turning to you, which foreign entrants do you think are going to be likely to enter India?
Firstly, I think their numbers are very few. In my personal view, after all of this debate in the parliament for so many sessions and so much of protest on the street and so much of space given in the media to the issue of FDI in retail, it might actually be a whimper, when we look over the next 2-3 years as to how many new players have come in. I mean, there are some players already in India. They may want to increase their holdings in India. They might want to accelerate the expansion in India. But I don't anticipate a floodgate of or a flurry of too many players from overseas looking at India. Maybe just 2 or 3, no more.
How much investment do you see coming from these foreign retailers?
I would be most surprised if more than $10 billion come to India over the next 5 to 7 years.
Arvind, one of the challenges for the sector has been its profitability. How will FDI in retail change that?
It certainly should do so, and therefore this, at least my viewpoint is like this: the government should not be actually getting so much charged up about FDI or no FDI. It should actually want to look into saying, look, how retailing itself can be made more efficient in India, eliminate various bottlenecks in the way which are only causing loss of value. The producer is not benefiting from it, the consumer is not benefiting from it, and if the government is not benefiting from it, because there is so much leakage of tax revenue for the government because of the very fragmented nature of the retail.
So you're saying that increased competition in modern retailing will actually help the customer and in particular bring down prices?
Well, the cost of space, the cost of people, even the cost of energy is very different in various parts of the country. It is logical everywhere that you will therefore mark up your prices more where your operating costs are higher, and you will actually operate at lower costs, and therefore you can have a lower price to the consumers elsewhere.
Arvind, that's very interesting. Mr. Biyani, if you look at margins for the Indian retailers, they're actually quite low, and the profitability is also quite low compared to the rest of Asia. When will that converge to Asian levels?
I think if you look at each and every category or each and every format of ours, a fashion format, I think it's quite profitable. If you look at our departmental store format, it's maturing and probably it will show profitability more than the fashion format. If you look at our hypermarket, we have an interesting fashion mix, and that brings in the gross margin which probably no other hypermarket retailer gets in. Our convenience store model is moving towards profitability. Our electronic store model, yes, definitely, it can't be profitable very, very soon, but we are reaching to a level wherein we are now getting break-evens. Home store, our model, we are looking at making it more productive and reducing the size so that it can become profitable much, much earlier. And it has the potential to be very, very profitable. I think retailing as a business, you need scale, you need size, you need a certain amount of productivity, certain sizing of the stores. I think we all retailers have learned it the hard way.
Will it really help address the issues you're facing in terms of high debt, real estate and talent retention?
I think India will have always challenges of rent as a percentage of sales. But if you look at the productivity of stores going up, that should not be an issue. If you look at people talent, I think our people productivity can shoot up significantly, and that's what we have been able to do over a period of time. So that again is not we have challenges of power cost being very, very high compared to anywhere else in the world. We have occupation cost in terms of managing the mall costs, which are significantly higher. So there are cost disadvantages, but there are other advantages also. I think it's a journey, and to view it from a quarter basis, to view it from a very short-term perspective, I don't think so one can look at retail business from that perspective.
That's a good point. Arvind, what kind of formats do you think are going to win in India? Department stores, hypermarkets or mom and pop stores?
So I personally believe that big box is not the solution for India. It is bound to be a combination of relatively small stores, specialty stores, and I think e-commerce is going to be a game changer as far as retail sector is concerned in India within 3 to 5 years.
Mr. Biyani, you've demerged your businesses into food, fashion and hypermarkets. Is this in preparation for tying up with a strategic partner?
I don't think so. I think we, over a period of last 15 years, we have done many businesses, and we thought it's time to reduce the number of businesses, reduce the variables, create companies where investors can understand specifically in the sector in which they want to invest. So all this has been an effort to simplify working for ourselves and the investors who look and work with us more than the market. And when you are creating a design, I think you have to build in a design wherein if you need a strategic alliance or a strategic partner or an investor, it should happen.
What will you gain most from a tie-up?
I think it's a leadership position which we get. Again, we get the ambition of still growing business at the rate which we want to grow. You have the resources to grow, you have the appetite to grow, you can look at things again in a long-term perspective. I think that changes.
But you already have a leading position with Pantaloon having a 40% share in the department store market and 69% share in the hypermarkets.
I think that's a very impressive margin, a percentage share of business which we have. But I think the challenge for any retailer is to maintain that lead. I think that's where we would love to do that, and that's where resources come handy.
Now, Mr. Biyani, the valuations of the Indian retail sector are very high as compared to the rest of Asia. Do you have any thoughts on that?
I don't think so. The valuations are high, firstly. Secondly, I think it's the potential of the business which is also important. Secondly, the growth of the business, one can make it happen. Thirdly, where are the markets where you get 1.3 billion people wanting to consume more?
Arvind, what about scalability, given that individual states still have to take a final say on FDI?
It is certainly a very dangerous precedent the government is setting up in this case, simply because even today, let us say the state like Delhi, Mrs. Sheila Dixit very clearly has said she wants modern retailers to set up shop in Delhi. Tomorrow, if she loses election and a BJP government comes to power, what happens to those permissions? The government should have been bold enough to say that, look, once permissions are granted for FDI, unless a foreign retailer is not complying with the local laws, they should be treated at par with local retailers.
Mr. Biyani and Arvind, thanks so much for those insights. I have with me Renuka Ramnath, founder Multiples Asset Management, and Nikhil Vora, MD of IDFC Securities, to talk about investment opportunities in the Indian retail sector. Renuka, let me start with you. I'd like to get your perspective as an investor. He was one of the early investors into this sector from a private equity point of view. So, are you still enthusiastic about this sector? Are you still seeing a lot of opportunities in the sector today?
I won't say so, Punita. I think that in the early stages of the evolution of the sector, there were a lot of opportunities in terms of bringing the cult of organized retailing into the Indian consumer. So you spotted outstanding entrepreneurs like Kishore Biani, like Shoppers Stop at that time, headed by Nagesh, suitably backed by the Raheja Group, where you could put in private equity capital, bank on their entrepreneurship and leadership quality to bring in a new economic opportunity into the country. I think that that story played very well in its time, and we had very profitable exits. Today, the game has gone to another level. I think we have clearly established the cult of organized retailing. We have opened up the sector for international strategics to come in, which is an excellent step in the right direction. And the survivors from now on will be on enterprises that can benchmark themselves to some of the global matrices and pump in investments that are commensurate with what their international peers will do to create the new economic value. So clearly the game has changed, and therefore the way one would look at this sector today, the kind of capital, the kind of companies you would back, and the strategies you would play will be very, very different.
So Nikhil, based on what we've heard from Renuka, it doesn't appear that there's going to be a lot of potential for the Indian companies to benefit from this trend. So why do you think the stocks of these companies have moved up?
I think the reason for some of these retail stocks to go up and sustain is possibly a lot more to do beyond FDI also. So I would give that a lot more credence than just the announcement of FDI. The interesting part is that while FDI has been talked about, there's also been certain corporate developments across all retail companies. So if you look at Pantaloon, for instance, you've seen potential a demerger, which is pretty much on cards of fashion, food and retail business. So you know, that's been literally the core reason why Pantaloon has shaped up better. You look at Titan, Titan has been fairly aggressive in its core business and looking at adding new businesses through the edutainment business that they have looked at.
So Nikhil, just turning on to valuation, you know, the Indian companies, the retail companies, valuations are very high as compared to, say, China, Korea, or even the US, whereas the debt levels of the Indian companies are much higher than those companies, and the ROEs are also a lot lower. So how do you explain such high valuations?
I think the initial period of clutter in retail is getting over, or has got over. The fact is that today, if you look at Indian retail, it is dominated or will be dominated in the next 3 years by players like Reliance, Tata's, Birla's, and Kishorji, so Pantaloon. You're looking at literally 4 players dominating the Indian retail scene, which is quite disconnected to what happened in the historic past. And at least the 3 players of them have extremely strong capability on execution, on capitalization also. So, and the 4th player would possibly be a very good entrant for an FDI as and when it really shapes up. So I think the credibility of the space is starting to happen. It is quite akin to media that you would have seen in the historic past. So I think suddenly the credibility of the space is starting to look a lot more better than what you've seen historic. Valuations, like I said before, I think the economics gets destroyed in the initial stages of growth, which is pretty much what's happening with retail right now. My sense is that now with a more relevant competitive environment, people will make economic sense out of the entire business. So you will start to see retail as a business make a fair bit of economic profit, which is what's happened globally. So I don't see that to be too much of a disconnect as you move forward. But these are clearly structural plays. It's unlikely that this will shape up in the next few quarters. It will take the next few years before it starts to happen.
So Renuka, turning back to you, what business models do you think will survive, and what business models would you back right now?
Now it is about efficiencies. It's about how well you're able to get your turns, working capital turns in your shop. How are you managing your supply chain, which is again, you know, part of the overall working capital management. How are you able to drive revenue per square feet, and what's the profitability in the revenue, which is a function of your merchandise. So if you're merely procuring and selling, where you only get the retailing margin, your ability to have an appropriate return on equity I don't think is possible. So it has to be a combination of manufactured plus procured retailing that one will have to do. So what's your merchandise mix? Where are you really making your money? How are you conducting your affairs in terms of supply chain management, in terms of cost, which is employee cost? What's the negotiating power you have with the real estate developers? So what's going to be the rent as a percentage of your revenue? All of them will now come into very, very sharp focus.
So in this environment, where do you see the opportunities? I mean, is there any one or two retailer that you would actually still be looking to back?
Right. So our hunt continues, Punita, to differentiate its stories. Constantly, we are engaged in finding who is going to cause a disruption, in the marketplace and create a new market, so to speak. So in that context, we continue to look at opportunities, say in luxury retailing, branded play, in the Indian market, where you are increasing your margins by taking an existing business into a branded domain where you are able to command a much higher premium. We are very, very keen to see what is the sustainability that you are building in your business model. We are also today, I would say, one of the big changes in our philosophy is that 10 years back, when people talked about growth and when they chased growth to the exclusion of everything else, they may have been very empathetic to that need. Today, I would say that if you're growing at the front end, your back end has to keep pace. Your back end has to be ahead of your front end.
So just to elaborate, you actually said luxury is an area that you would look at. So would you look at companies that are in the business of apparel, high-end apparel? There are a lot of Indian listed companies that are in that space, jewelry companies, Indian jewelry companies, because they're not going to see a lot of competition from, say, the Tiffany's of the world. So is that a segment that you would be looking in hunting for?
Definitely. We would look at them. In apparels particularly, one of the challenges we have had is in terms of, again, scale. The apparel companies, earlier they used to stagnate at 100, 150 crores, but now I think the game has changed. We do see apparel brands which are 500 crores. We also see some apparel brands which are 1,000 crores. And the question that we need to satisfy ourselves is, can we create a 5,000 crore brand?
Right.
In any of these sectors. But yes, you've picked on the right ones.
Right. So Nikhil, can you tell us your top picks right now for the next 1 to 2 years so that investors can actually see a way to make money?
I would be fairly bullish on names like Pantaloons, which has gone through a fair bit of pain. And I'm not really being ignorant about that pain. We've also been negative on the stock for some time. But I think now they're starting to see a lot more stability in the way the business operates. The core operating team has seen some bit of change. The business is starting to look a lot more better. It's got more disciplined than ever before. So I think Pantaloon could be one clear winner. And as you move forward, Pantaloon has the scale to also attract FDI. So if there was a backstop in terms of strategic value of the asset, Pantaloon has one. And excluding even FDI, I think Titan is a model which is fairly non-replicable right now. And I think at least the management seems to be at least aware of the changing trends of consumers and pretty much capitalizing on that. So I think the ability to invest slightly ahead of time in Titan is something which I like. And the ability to have stayed invested in retailing is what I like in Pantaloons. So these are the two names which I would prefer.
So one final question. What kind of returns do you see over the next several years for people who are investing in this sector? Are they going to be equal or better than what we've seen in the last 5 years?
For my first view would be that one will have to take a much, much longer term view now. I mean, don't come into this stock with short term aspirations. The winner will definitely deliver better returns than the past. So if you look at the past, I mean, most companies have returned anywhere between 15 to 20% on the high side, and it could even be lower. The winners going forward would deliver better returns than that. But one will have to be extremely careful about making that choice. Again, my recommendation is don't place just sector bets. please choose specific stocks for specific reason within that sector.
Thank you so much, Renuka, for this, and thank you, Nikhil, as well. Joining me now is Tanveer Gill of ET Now. Tanveer, tell us what other sell-side firms are saying about the retail sector.
Well, when it comes to the retail sector, Punita, analysts take a very stock-specific approach rather than painting the entire sector with the same brush. If you just take a look at their year-to-date 3-year and 5-year returns, Pantaloon Retail has done phenomenally well this year. It's been the key beneficiary of the FDI and retail news. 3-year return has been negative. Shoppers Stop, from its IPO in 2005, has given a return over the last 7-8 years of about 100%. If you break it up into its year-to-date, 3-year and 5-year performance, the returns have been positive. In terms of pure valuations, it's very hard to look at retail stocks only from a price to earnings multiple, because this is a capital intensive sector and it has a high gestation. So you look at it in conjunction with price to book, you look at it in conjunction with EV per EBITDA, because debt is a critical component for the sector, and for ROEs. ROEs for both the stocks, Pantaloon Retail and Shoppers Stop, are on the lower side. All in all, it just seems like managing debt is the key criteria, and how they fuel their expansion is going to be critical for them going forward. And that brings me to my question to you, Punita. You've had a 360-degree perspective from the guests on the show, talking about the future of retail. What is your key takeaway on what will influence the sector going forward, and what this news of FDI and multi-brand retail means for the stocks and the players in the space?
There is an opportunity for this sector to catch up and actually grow and converge with what we see in the rest of Asia in terms of just the growth. Now, on profitability, as you have yourself, shown the data, ROEs are very low. A lot of companies have high debt, and profitability is a major concern. That profitability will improve as the industry grows and consolidates, because as I've said, it's very fragmented. So as the industry consolidates, and I think that process will actually accelerate with FDI and retail. Actually, if you look at now a certain part of the retail sector, which is specialty retail, particularly jewelry and watches, now that segment is reasonably mature in India, and the share of that segment is about 8% of the total, all the formats in India, and it's as compared to, say, hypermarkets, which are only 1 to 2%. And even department stores are very little. So the specialty retail segment has better profitability, better margins, and in some cases the valuation is also more attractive. So I think that in the very near term, this segment has done well in the stock market, and I expect whether it is specialty retail in terms of certain jewelry companies, certain footwear companies, certain fashion and apparel companies, as we've heard from Renuka, the luxury segment as well. So according to me, I think that segment will continue to do well in the short term and provide steady growth. Now, when you look at these big formats like hypermarkets and department stores, I think the stock market performance of these companies that are in these big formats is going to be dependent on a number of events that will drive their profitability, such as M&A. I expect M&A in the sector to be quite active, because I think consolidation will happen and foreign players we will see a lot of M&A activity. So that events like M&A news, events like that might cause debt restructuring or selective tie-ups with foreign partners and joint ventures, those are going to be the events that are going to drive the stock performance of these companies, but it's going to become obviously very stock specific and company specific in the near term. Well, that's my view, Tanveer. We will be back next week to give you detailed insights into the power sector. Goodbye and thank you.